I'm here with my good friend Akhil, Akhil Patel. Let's go. You started this off.
Yeah, well, really good to be talking as always, Andy. And I'm glad we're recording this so that people can get a sense of what we've been talking about. Well, for me, everything comes back down to the 18-year cycle. I feel it's the dominant cycle in an economy. And 2026, we've always said would be a very important year within the current iteration of the 18-year cycle. And it's been a pretty interesting start to 2026. So I'd probably start there if I would. But actually, I've also clearly been following what's going on in Bitcoin and silver and in the US dollar and so on. I mean, markets are really starting to move in many ways. The ags are sort of starting to move as well. So yeah, it's been really interesting interesting few weeks, and I think that's just a sort of a preview for the remainder of the year. It's going to be interesting. It's going to be turbulent. There's going to be lots for us to talk about, write about for our subscribers.
Yeah. So putting this into cycles context, this week is really pretty critical week. This next couple of weeks, next 10 days, I think, in terms of the longer cycles, you're going to talk about the 18.6 year cycle, which is your speciality.
Yeah.
I'd like to bring some stuff in on the 36-year cycle after that. Silver and gold are selling off right now, and I'm just saying, as pointed out, silver 2 days ago had made a 38.2% retracement at the same time as gold had made a 61.8% retracement.
Right.
So they
Yeah,
were
yeah.
both at key Fibonacci points, and they both turned down. But gold would be the stronger of the two. But what's your take on all this?
Well, I think that most obvious thing to say is that when you get that sort of parabolic move in a market, it doesn't matter what the sort of fundamentals are, it's not
Yeah,
going to last very long. And in fact, I think I was quite surprised at how long it did last, given the sort of strength of the move and the fact that it pretty much went vertical. And you know, outside the crypto space, you rarely see things like that. So a couple of things to add to that. Everyone was in profit by definition because they would have bought in at some point and then the next day it would have gone up another 10%.
yeah, yeah,
There's obviously the story around AI, there's a story around inflation and precious metals and the move in gold and so on. So there's a very strong kind of narrative about it. Everyone was saying, well, I know it needs to correct, but it's going to go up. It needs to go up even more. And some people saying it would be, $200 or whatever. There's all that kind of stuff. I'm on the investment committee of a portfolio of fund based in Australia, and we had a silver position. And for the last sort of probably 3 or 4 months, a lot of the conversations around, do you think we should take some profit off the table because this has got to end at some point? And we did. And in
yay,
fact, we didn't get out fully, but the final part of the position was taken off close to the peak. Now, I'm not saying that is, you know, anyone can do that in some sense. You just have to, know your sort of history of bubbles and so on.
yeah.
Um, but I think that was kind of the dominant sort of part of our thinking. Um, I do feel there's further to go in both of those kind of markets. And this ties in with a sort of the final kind of act of the 18-year cycle when there's a lot of concern about the health of the financial system. There's, the possibility of a kind of major crisis. Um, and you then have people looking for other havens to put their money into, and gold and silver have played that role historically. But what I would say is, even despite that, very turbulent. There will be big drawdowns. Maybe we're seeing, well, we've seen one. We might have a bit further to go. It might go back up. Don't know if it will necessarily make a new high very shortly, but you never know. Um, there's a lot of capital flowing around and looking for places to be parked. So it's gonna be interesting.
Yeah, so what do you think? Do you think that's a major high for the time being? Obviously, it's never going to be the final high because history shows that everything just goes up at some point, doesn't it? I mean, the other thing that was becoming apparent to me through January was so many people that really have nothing to do with markets are suddenly were piling in and putting their investment retirement funds into this, and That's sort of a big no-no. But what do you think? That's a major high for the time being, or what? Or we've
I
got
mean,
the
you'd think so. You'd think so. But you, I mean, the thing is, the move was so incredible. It was so vertical that it's hard to say. But I think that that high is in for the time being. That would be my kind of expectation.
yeah.
But let's not discount the possibility of the madness of crowds. So we'll wait and see.
Absolutely, that's another great book as well, isn't it? But so let's not digress. So,
Um,
precious metals in the 18.6 year cycle. Any particular correlations that you'd care to
yeah,
reveal?
yeah. So I mean, I've written about it in my book, which I can see is nicely placed on your shelf,
There we
Andy.
go. There it is. That one there. That one.
Yeah, there you
Let's
go.
buy that
Yeah,
book there. Secret Wealth
yeah,
Advantage. You buy that one as well. It's a bit out of date now, but yeah. And
yeah,
if you want something to, buy the whiskey as well. Storyman whiskey. Quick couple of product placement plugs. Right.
there you go.
Right.
There you go.
It
Yeah.
makes it easy
So
to read the book. Sorry, seriously.
no, no, it's there is a correlation between the end of the cycle and precious metals, partly in the first instance because commodities in general tend to do quite well, particularly industrials and so on. And when there's a strong move in commodities, there are concerns about inflation and other things. Then you do often, but there's not a huge amount of back history here. You often see a move up in gold and silver. Um, I think where it really comes into its own is in the aftermath of any potential crisis which you get at the end of the cycle, and then gold and silver have historically had quite a big move. Again, it's not a huge amount of history, so you have to be a little careful with that prediction, but you would see in the current context that how that might come about. Um, and since we haven't yet had this a real crisis phase of the 18.6 year cycle, you've got to expect that gold and silver have further upside. It's just that it won't necessarily be straight away and it won't just be in a straight line. And that's, I think, what you need to remember because in a crisis situation, people have to sell what they can, not what they would like to. And
Mhm.
sometimes that involves reducing gold positions, etc., to make good on obligations elsewhere and in their sort of portfolio.
And of course, history shows things like the Bunker Hunt Corner, which was 46 years ago, wasn't it? Off the top of my head. Yeah, 1980. So, that came in and they suddenly changed the margining overnight and that collapsed the market. So that was a bit of intervention, really, that destroyed that move. But yeah, so exciting times. What
Exciting
else do you
times.
see? Yeah, yeah. Well, I think that's the key point, really, and that's the genesis of this particular video is that there is so much going on. It really needs careful navigation where we are right now, and you can see this geopolitically. We can see what's happening with the revealing, the dumping of all these files, the U.S. administration, the British government, the royal family, and probably everybody else, and I don't think you and I've been named in those files, and I'd see no reason
And they're
why.
very unlikely to.
Yeah, yeah, yeah. I don't think he was into cycles and Gann and stuff. So, but yeah, no. So yeah, any views on the extreme level of geopolitical ongoings, as it were, even shenanigans?
Um, well, if we step back from maybe the day-to-day kind of nonsense that we have to read about in the papers all the time, I also write about the long cycle, the Kondratieff Wave, in my book, and that is also peaking around the same time as the 18.6 year cycle. And that very much involves great power competition. It's competition for resources, it's competition for access to markets, it's competition for technological supremacy, and it's competition for controlling the terms on which world trade takes place. Now, you can see that contest between the US and China playing out very clearly, but it's actually been playing out since probably the start of the long cycle with the accession of China in 2001 to the World Trade Organization. And that was the moment at which, a lot of what was called globalization, but deindustrialization and the US and in Western Europe was taking place. And that has had some pretty profound consequences for the global economy, for the what they call it, the international trading system, the world order, and so on, rules-based order, and etc. People have used different terminology, but it's the same kind of process. And so you would expect there to be a lot of geopolitical turbulence, and we've seen that increasing, and I think it will increase even further. And I know you have got a lot of data and analysis in relation to other cycles about this. The long cycle is also associated with a lot of internal conflict and disharmony, partly associated with the adoption of new technologies, which really kill old industries, obviously boost new ones, and that creates a lot of social tension and concerns about inequality and so on. And it's all out in the open. It was like that in the 1960s and 70s. It's like that again in the 2010s and 2020s. And again, I don't expect that to die down anytime soon. So that makes for a very noisy environment, a very unsettling one. No one seems to be getting on. That's, at least to me, that's kind of quite upsetting. And it doesn't appear to be a resolution in sight, and probably there isn't for quite some time, but it will eventually, all cycles turn, it will eventually settle down. In relation to the day-to-day, well, what you find, and I'm sure you found this when you study cycles, is that, people and things happen, people come around and things happen to make the cycles kind of repeat. And the presence of leadership in the US and elsewhere is very much like that. So it's very disruptive. It's not particularly nice. I don't think it's particularly helpful or positive, but that's obviously a personal opinion. And it's not.
What cycle are you relating that back to then in terms of US?
Well, I'm actually to both. The sort of the geopolitical turbulence and so on. I mean,
Yeah.
you've seen in both China and the US. I mean, they're very a Chinese. I was just about to call him the Chinese emperor. The Chinese president is, obviously wanting to reestablish China as the great power, the Middle Kingdom. The Chinese emperor is at the head of global affairs. China has never been particularly expansionist, but it has seen itself as having a particular place in the world order historically. And I don't think that the Chinese president has been particularly quiet about having that kind of ambition for his country and for his position and his status. And he has surrounded himself by advisors who support him in that, and who probably don't tell him what he really needs to hear. And you just there's kind of the recent news about getting rid of a general and so on who was supposedly a friend, etc. It's kind of that's a continuation of quite a long policy of getting rid of people who might have their own independent power bases. So you've got that in China. In the US, of course, you've got almost the same thing. You've got a president who's surrounded by sycophants, who has a particular view about how things should happen. It's actually not very diplomatic. It's actually not, I think, particularly constructive or helpful. And I don't think it's particularly helpful for America. I think America will find out very soon its kind of revised position in the world order, and it's not really at the head of it any longer. I think once we get through a crisis, we'll start to see these things a bit more clearly. But anyway, we are yet at that point, and so these things are a bit more sort of muddy. And that is very much linked to both of those things, very much linked to the long cycle, but also they're both intent on growing the economy and doing what it takes. And, that includes fiddling with data and statistics, not hearing any negative news, getting mad at companies that say, well, actually, this is a bad idea, the tariffs and so on. This is very much late 18.6 year cycle behavior. It's all about, positive news and so on. It's much harder in the age of social media to get away with that, by the way, but nonetheless,
Right.
that is a repeat. And it's also trying, ultimately to boost real estate prices and so on, because that is the only game in town in terms of generating economic growth. And I think that's true in the US, actually. I mean, when I say real estate, I mean also including things in that like data centers. But that is, a real estate play in many ways. It's finding a massive site next to kind of water and other cooling systems and energy grids and so on. And I think actually becoming quite difficult for these tech companies to find suitable locations, which is driving up sort of land prices. So there is an element of that, and this is what I mean by saying that things are happening to make both of those cycles repeat.
You just mentioned something quite interesting there, data centers, and what's your view? Are we going to be able to find enough power to enough capabilities to generate this
Yeah.
huge surge in power that's going to be needed.
Well, it's clearly affecting a lot of communities at the moment. I think ultimately, technology always gets a bit more efficient. You find ways of reducing your inputs and your input costs. Um, and I think that will happen. I think probably people will find quite rapidly that actually AI, in its current form, the generative AI is not really that kind of great. I mean, don't get me wrong, it's the technology is miraculous in some ways, but have if you know what you're talking about and you ask ChatGPT for its opinion or its view, half of it is rubbish. Well, not half of it, but quite a significant chunk of it is rubbish, and then you've got to
Yeah, yeah,
reprompt, and it just takes ages. It's quite a frustrating experience once your expectations have now been calibrated to this being available very quickly, right?
yeah, yeah.
Um, and so I think they will probably get to a view that actually you don't need a super sophisticated model. You can do something with a lot less energy intensive usage to get you most of the way you need to get to, and then you obviously human beings take over, as it were. So I see that becoming more efficient over time. It must do a bit like a lot of other technological innovations in history. I think the problem is that it's very land intensive as well. Um, and and I mean, I think we're talking about sort of expenditure now, that is roughly 3% of US GDP or something, and this level of capital expenditure rivals any kind of boom that we've seen historically. So the British railway boom of the 1840s or similar railway booms in the US a decade later. Um, and I think this is kind of going to be a feature of economic activity going forwards, and that means sort of quite a high demand for land, and maybe the sort of thing that pushes the next 18.6 year cycle forward, but remains to be seen.
Okay, very good. What should we talk about next? Bitcoin? Any views on that?
Yeah, I was just writing an email to my subscribers earlier today, and I pointed out that I told them to look out for September, October 2025 as the next peak in Bitcoin, and it came in October. So I'm pretty pleased with myself. I mean,
Did you
people,
get out, or were you not playing that game?
I mean, I can't really stand Bitcoin to admit. So I don't really play that game.
Right,
But
right, right.
I mean, I have a small crypto portfolio. I get out? I think I reduced my positions. I wasn't entirely sure that the cycle would repeat on time. I suspected it would, but at that time, people were talking about $1 million Bitcoin, so I didn't think it was worth reducing entirely just in
Right.
case something else was happening. And of course, the whole sort of Trump's family is very much involved in the crypto industry. Talk of a strategic Bitcoin reserve and all this sort of thing. I thought maybe that might intervene in some ways. Anyway,
Well,
the
I did
history
reach a major target. I have to say, in our technical
96
stuff
or
in our
whatever.
report, we did have a
Yeah,
major
you did.
target there,
Yeah, that's right.
both
You
time
did. You
and
did.
price.
You did call the price actually, which I didn't quite so well. Um, I mean, the history of Bitcoin is relatively clear after these peaks. It's sort of fairly significant drawdown and a basing pattern, and then that sort of the next kind of process takes place. So I don't expect things to be different. I don't know if you've got any different views on that. Maybe you've got
Well,
your.
I've never really understood what it is. I've seen every description of it, but I still don't get it as a through the economist's sort of hat with that hat on. But I also understand. I don't think it's going to disappear for somebody in the last 24 hours. Just briefly, I don't got around to looking at it, saying that it's going to go to zero and it's dead and gone. But I don't think it will because it does transcend all boundaries. It keeps anonymity and it's a good way of avoiding too much observation and currency fees. So I think there's a place
Oh
for it.
yeah, absolutely,
Yeah, I don't
absolutely.
think it's going to die completely, but equally, I still don't get it. But I mean, that's it. Yeah,
It's well, see, I try to separate the technology from the actual kind of the actual coin.
right.
The technology, the sort of secure transfer of information, um, yeah, and use in transactions is a game changer and can be applied in so many different ways. And I think we
You're
have
talking
seen
blockchain. You mean
applications,
blockchain,
the
basically, right?
blockchain
So,
technology,
yeah,
absolutely.
yeah,
And we've seen that in many different guises. And fractional ownership of assets and other things. I mean, is one example, but the speed of transactions and the security is really quite remarkable. And I do think that is going to be the foundation of the new kind of economy, with AI and other sort of technological applications, is going to be the foundation. But I don't think we should kid ourselves about Bitcoin. I mean, it's an asset to speculate in.
mm,
And when it goes up very hard, and all these new financial products are linked to it, and a lot of leverage is involved, and digital asset treasury companies, basically getting investors to help them buy Bitcoin, which then goes up in value. So then they borrow more to buy more, and all that kind of stuff. I mean, you've seen it in other cycles with different vehicles, utility companies, and which were the sort of technological innovations of the day, etc. So Bitcoin is no different. The problem is that there's this massive story around how it's the future, and I think that's now,
yeah.
when you've had some real turbulence over the last sort of 12 months, Bitcoin hasn't been the place that people have been parking capital. I
Well,
think that's quite telling. Now, maybe in the future it might sort of play that role, but doesn't appear to be the case at the moment.
it's just a quick digression here. I'm just halfway through a book called 1929, which was by Andrew
Oh
Ross
yeah,
Sorkin. Have
okay.
you read that?
I haven't. I've seen it in bookshops, and I know it's something that I need to read. So, would you
It's
recommend it?
brilliant. And it's
Yeah.
brilliant. And it wasn't what I was expecting. I haven't finished it yet, but
Okay.
it puts you in the moment. And I think Andrew Ross Sorkin wrote Billions as well, didn't he? If you've ever watched that series, that
Oh right. Okay. I have.
Damien,
Yeah.
what's
Yeah.
his
Yeah.
Damien, great actor.
Yeah.
Um, anyway, well, the reason I mentioned that book is because you can see how the bubble was created, and it was like, okay, now we're giving you this on margin, and you can have even more,
Yeah.
you can borrow even more, and and you can see that the wise people objecting, saying this is going to cause a massive crash, and saying no, it's a whole new concept now. There's never going to be
Yeah.
another crash. There's no, this time it's different, and so on.
Yeah.
So I think that's quite worth reading, because the same principles that you see unfolding in 1929 were also the things that have really unfolded with that rise of Bitcoin and silver, of course, and not and gold in the last few weeks.
Yeah. Yeah. Absolutely. Yeah, I definitely read that, and it's a very timely book. And actually, when I in my own book, I used the cycle that culminated with the 1929 crash as the example to kind of illustrate how the cycle might sort of be structured. So it wasn't just about the crash; it was also about the sort of 14 years before that, which kind of built up and up. I mean, there was the First World War, but in the US, it was had less of an impact than it did in Europe. Um, but particularly the 1920s, with the sort of new technology, the automobile and the radio, the new business models, the sort of the build out of cities, um, the feeling that it's a different era. Things are very different to the last time. The speculation, the leverage, etc., that culminated in the sort of peak in 1929 in the stock market. Of course, in the real estate market, actually, at least in residential real estate, the peak was a bit before that. It often is. Commercial real estate peak is after the residential one. Something we're probably seeing this cycle as well. Um, but the last 2 years were really kind of pure outright speculation. And of course, I mean, everyone got carried away. Even Benjamin Graham, the father of value
Yeah, yeah.
investing. It's always going to, it's always focus on fundamental values. But he got carried away with how well everything was going. Because of course, a rising tide lifts all ships. So it was quite an interesting episode.
A quick sort of mention for those who want to know more. Akhil, Phil, Anderson, Property Sharemarket Economics. They publish their annual forecast, and that's available. And I have our year ahead forecast, which has more of a geopolitical slant. Covers a whole series of things. That's available as a standalone, so you can get that from our site, and you can obviously get Phil and Akhil's work from their site as well. But here's a couple of things. Let's start off with a little bit of something curious, and then I want to get deeper into this 36-year cycle.
Mhm.
Is first of all, So 3rd of January 2026, Trump administration go and take Maduro in Venezuela, right? So exactly 36 years to the day, 3rd of January. So that'll be 1990, right? Yeah, 1990.
Yeah.
We've got George Bush Sr. takes Noriega to the day. That's it. You know, this is like to the precision to day stuff. 1st of January 2026, New York sees its first Asian Muslim mayor, Zoran Mandani, sworn in. Exactly 36 years today, 1st of January 1990, we see David Dinkins, the first African-American mayor, sworn in. So I'm kind of curious here that there's something going on. Now, we have this big 36-year cycle coming in, and I've done a deep dive about this in the year ahead report. And one of the key areas, and I think this is going to be critical, is that this cycle tends to see big changes in Russia, in the Soviet regimes, and so on. Because if we head back again 36 years to 1990, we've just seen the breaking down of the Berlin Wall in 1989, 1990. But we saw the breakup of the Soviet Union, you know, and Gorbachev and everything. That was it. They all became separate states. That was the end of the USSR. Then you can go back the previous cycle and you see the death of Stalin and the cycle, you know, which changed things, you know, tremendously. You know, that it was then released from this strong rule. And the previous revolution back took us the previous 36-year cycle took us back to the 1917 revolution. So what we're really seeing here is that there is a very prevalent cycle with what's going on in Russia. And that would suggest that something big is about to happen to the Putin regime. I think, you know, obviously these things don't happen overnight. And I haven't quite figured out what it might be. So if I bounce that back, and I've got some other things to talk about with regards to 36 years, but, you know, have you got any thoughts on what might be going on in Russia, or is it not something you've particularly had a good look at?
Well, the short answer is not something I've had a particularly good look at, or at least it's hard to know really what is the reality, given that, you know, media is controlled in Russia to a large extent, and actually it's controlled in the West as well. And we have nothing positive to say about Russia at the moment.
Right.
So not something I know about. I mean, I think what it is, it sounds plausible, and you know, it would certainly be the sort of thing you might expect to happen somewhere in relation to the long cycle. I just don't know what might drive that. I don't know the regime or what's going on.
Right.
I mean, I do suspect though that, you know, I mean, Russia may well end up getting a third of Ukraine if there's a peace deal later this year, which, you know, seems like quite positive for the Putin regime. But on the other hand, the human cost of all of that has been quite significant. I mean, right, not quite. It's a complete understatement. It's been a very, very significant cost, and that surely has some repercussions underneath it all, in terms of social turmoil, etc. So, I think that's probably going to be a factor in the coming years, and maybe that's related to what you're saying.
The people that are likely to succeed him are probably going to be more hardlined. So that would tie in with the idea that Russia does gain geographical space in Ukraine. But also, I think these cycles to some extent do align with issues to do with commodities and especially grains coming from Russia. That's quite a big issue, or not a big issue. It's a big cycle to just say.
Yeah.
I'm seeing some interesting stuff there, as you mentioned earlier as well, and so I think that might be part of what's going on as well. So
yeah, no, I agree with that. I agree with that. It makes sense.
So I think that's something people should sort of make a note of. The other cycle, we talked about 36 years. This 36-year pattern also impacts Iran and Persia, and it goes back quite a way. The repetitions, again, we've covered that in the year ahead report, you know, as well as some markets forecasts and everything. But I think that's quite relevant. And also the 45-year cycle, which, you know, I'm a huge fan of. That one there, we take that back to 1981. And, you know, January 1981, the last week of January 1981 was when the American embassy hostages were finally released, and they were waiting for for Jimmy Carter to end his time period as president, and it was within hours of the inauguration of Ronald Reagan, and there'd been the failed Operation Eagle Claw to rescue those hostages as well. That had failed badly, and then within hours of Ronald Reagan being inaugurated, they released the hostages. And then you follow that cycle together with a 36-year cycle, and suddenly you see huge change in Iran. So my money's on the fact that I think Iran is going to open up and be more pro-West. I think we're also possibly going to see this notion that the theocracy dissolves to some extent. But those are just my thoughts. That's what the cycle is telling us. Yeah.
I mean, the only thing I'd say with both of those is, I mean, I totally agree about the sort of commodity-linked nature of, see, Russia. I mean, that would obviously have a big effect. And if you have the downswing of the long cycle beginning in the next few years, and a commodity price collapse and a deep recession and all this sort of discontent related to the war and other things, isolation, etc., I think it's very plausible that something could give. And when commodity prices, both in terms of them being high and them being very low, can have huge political and social ramifications. With high prices, for example, you had high wheat prices in particular. You had the Arab Spring in 2011, not uncoincidentally related to and linked and associated with the peak in wheat prices in 2008 and 2011.
Oh, yeah, let me come back to those in a minute, but carry on. Yeah.
Yeah. And the second thing I'd say, just on the other side of that, and maybe this fits in with this sort of theme of turbulence, is that when these regimes, if they were to fall, would unleash a lot of political problems. Well, we saw that with the collapse of the USSR in 91. I mean, essentially, the wealth of Russia was given away to those who eventually became oligarchs, and all sorts of horrible things going on behind the scenes. And there was a massive collapse in life expectancy and a massive increase in alcoholism and so on. I think you would, so maybe there's a continuation, but a more hardline version of the regime in Russia. But if Iran were to collapse, the theocracy and nothing in place, that would also have very significant issues for the region and elsewhere. So I'm sure it's not something that Western powers would want. I think they'd probably want a sort of opening up of Iran gradually, with the existing kind of regime in place, or succeeding to something a bit more liberal, etc. But anyway, let's see. I mean, we are living in the era of turbulence, and I don't think there's anything that you can't imagine might happen, because these things can. I mean, who would have thought that some of the many things that have gone on in the last 12 months would have happened 12 months before that, as it were.
Well, I've actually got a theory, and I have published it in the market timing report several times and expanded on it. But Iran is so critical now. Persia, I mean, it's a beautiful. I mean, I've actually been lucky enough to go and visit. It's an absolutely stunning place. In times of peace, I've been there several times because of some of the work I've been doing over the years. But the key point I wanted to make was when America pulled out of Afghanistan. Okay.
Yeah.
Afghanistan is a key point because it has a lot of rare earths, it has a lot of rare minerals and things that are really important. So regardless of who sanctioned it, whether it was Biden or Trump, they both battered it around and saying it was the other person's fault. It doesn't matter. The point is, at that point, China came in very, very quickly and expanded. It was already in there to some extent, but it's now got a major presence there in terms of mining and construction and so on. Now, the final part of the pathway to the Straits of Hormuz, which is arguably the most critical area in the world for oil, is Iran. That's it. I mean, there's a few other stans and so on, which it's quite a stunning area. It's an area that very few people have had a chance to visit, but that area there that effectively takes China, all the way from the east all the way through to the Straits of Hormuz. So I think it's a very critical point, and I think we mustn't underestimate the importance of that land geographically. I think that's a very important issue. And the other thing you mentioned, the wheat cycles. I just wanted to point out something again we've done I think it's on one of our YouTube videos, but you talked about the 2008 and 2010, 2011 peaks. The 2008 peak was a 144-year cycle directly from the Civil War peak, which again was a peak from the 1720 cycle. And then the 2010, 2000, and also that was the point. That was the weakest the US dollar was in the last several decades as well. At that point, I know the pound was 2-1, 2.11 to the dollar at that point. So we got the commodity inflation through currencies, and then the 2010, 2011 was the 90-year cycle from the post First World War peak in 1920. So I just want to throw those in for the cycles people watching this, for fellow geeks. But carry on. It just dawned on me, not everybody might be fully familiar with the K wave, the Kondratieff wave, and you've referenced it a few times. You want to just give everybody a bit of an expansion and just sort of a brief explanation on that one.
Yes, and with apologies for assuming that kind of knowledge. So it's a sort of 55 to 60 years long, it's called Kondratieff himself. Sorry, let me step back. 55 to 60 year cycle discovered by this Russian economist called Nikolai Kondratieff in the 1920s, who was a Institute of Business Cycles head, quite young man, and he was, I believe, asked to investigate the kind of the dynamics of business cycles in the West, because the belief was when the next crisis would happen, there'd be a complete collapse, because of course it seems self-evident to people who believed in Marxist ideology that would happen. Anyway, he discovered through actually enormous kind of research, gathering data on wheat prices and big iron prices and all sorts of commodities, interest rates and other things going back several centuries, and in the 1920s that would have been a very significant undertaking. And then to manually, as it were, analyze and crunch the numbers, and he discovered this sort of 55 to 60 year pattern. Now, what was quite interesting in that is he associated that with many of the dynamics that I've described. So the geopolitical competition, the increase in wars and conflicts, the internal dislocations and struggles and revolutions all increase in the upside of the 55-year cycle. And also the application of new technologies. And that's, in fact, one of the causes for both the geopolitical and the internal conflicts. And you see it most clearly in the movement of commodity prices. So you have generally quite rising and high commodity prices in the upswing. And while you do get price spikes and rises during the downswing, in general, the lows get lower. You don't have quite the same level of turbulence. There's a lot more kind of capital stuck in the financial system. And so on. So that is kind of essentially the kind of, it was, in some ways you could argue it's a rhythm of history that he had discovered. It wasn't so much a cycle, it's a rhythm of history. And I find it very, provides quite a lot of explanatory power to current events. And, for example, when, in the aftermath of the financial crisis in the early 2010s, I don't think people were really talking about conflict with China and all the stuff going on in Russia and Ukraine and Israel and other places. Now, for whatever reason, I mean, these are all very complicated kind of areas and complicated events. But people couldn't quite kind of expect that it would turn out to be quite so turbulent 10, 15 years on. But if you've been studying the long cycle, I think you had a reasonable expectation that this would be how it would play out.
Yeah, and I think, again, those who are studying cycles, say 55, 54 to 60 years. So, we can look at that. Gann always talked about a 60-year cycle being a very important one. It's 320s, 610s, and there are other reasons why that's important there. But also, even at 54 years, it's multiples of the 18.6 year cycle, etc. So it's a pretty critical one there. So, Akhil, we should probably wrap this up fairly soon. What should we leave everybody with? I've got a couple of views on the market, which I'm happy to put forward in a moment. But anything you want to sort of say? I mean, we are. The key point is that this is no ordinary year, right? This really needs a lot of careful road mapping, which is why we were chatting before and decided to hit the record button and go for this. But so this is a very impromptu event. But yeah, any thoughts you want to share for the next few weeks or anything like that?
Not, I think I've covered quite a bit of
Okay.
ground. There's a couple of things just to say. I mean, as you rightly pointed out, it's a key year in the operation of the current 18.6-year cycle. The cycle ends with a lot of turbulence and a lot of confusion and a lot of people saying quite contradictory things. And I think this time is going to be that sort of dynamic, but even greater than we've seen before. And I think that leaves the possibility open of very significant moves in the market. So I think you need to pay close attention. And that's certainly what I've been telling my subscribers for the last couple of years. Actually get ready for what will be quite an interesting and probably quite a wild ride.
Yeah, great. Absolutely. I'm going to share that same thing. I'm going to be a little bit more focused in as much as whilst I share that bigger view, I also think this next week, this next 10 days, we're filming this on February the 12th, 2026. I think we're going to enter a very critical series of windows. I think the 17th is a very key date. So I think we're going to see an increase in volatility, not just in the US equities markets, but also across a whole range of commodities as well. So on that note, so where can people find your work? What do you have to offer? Let's give everybody an opportunity to find yours.
Yeah, okay. So I'll start with my book, which is nicely on your shelf. So The
Yeah,
Secret Wealth
there we go.
Advantage.
There it is. Pointing with the pencil. Yeah.
So that gives you a very broad but also quite deep understanding of the 18.6-year cycle and the long cycle as well. If you want to hear from me more regularly, I think just go to our website, www.propertysharemarketeconomics.com. And there are various sort of different kind of newsletters you can sign up to, including a free one. So I highly recommend that you do that if you're interested in finding out more.
Fantastic. And of course, you know, you're in partnership with Phil Anderson, The Secret Life of Real Estate and Banking. Fantastic must-read book. You've got to read that along with The Secret Wealth Advantage. And for those interested in our work, we're at the Market Timing Report. We've got the Year Ahead editions available as a standalone. The Market Timing Report gives you timing information and a bit of geopolitical commentary every month. We're looking at where the major turns are in the significant markets. We've just released the grain reports, which we're very excited about because we're seeing opportunities we haven't seen before, but we also know they're going to be difficult to navigate. So that's there to help you with that. And then, of course, we've got our other platforms, the advanced seasonality and the smart money platform, looking at the legal insider trading. And we can see a lot of these commodity markets are showing build-ups now. So you go to markettimingreport.com, and again, there's a load of information there. So, Akhil, I think this is, I mean, given that this was like, let's catch up. And the next thing is we're recording this on the fly. So, yeah, folks, if you want to hear more of this stuff, if you've stayed through to the end of this, let us know there below. And, because some of you might find our shared conversations interesting. So let us know if you want more of that. Meanwhile, I wish you well, Akhil, and you've left the big bank, right? So you're a free agent now, and
that's right. I have time to write and research, and if people need advice and so on.
Yeah,
not advice per se, but sort of broader consulting, then I'm available for that too.
There we go. That's fantastic. So wishing you well. Thank you everybody for watching this, and let us know if you want any more of this stuff, and we'll be more than happy to do it. So take care, be safe, protect, manage your risk, whatever you do, and we'll see you next time. Thank you very much.